Dipan Mehta joins in to talk about trade as well. Hi Dipan, the week has not started off on a strong note, and we've seen another resurgence of fear hitting the markets, especially emerging markets, because of what happened with the jobs data. But from here on, how would you peg the range for this market? Do you see further downside?
I think that's very difficult to call at this point of time because a lot of factors which were not present a few months ago are quite active at this point of time. The variables certainly have increased and the volatility has gone up. Uncertainty has again come back into our markets. So till you don't have a handle on whether rupee is going to stabilize and what our current account deficit is going to look like in the current year, and also some more color as to how the Federal Reserve is going to go about its actual reduction in the quantitative easing which it has been undertaking. Unless we have answers to these questions, which anyway are difficult to answer, it's going to be very difficult to call which way our markets will move. But as we speak, I think the threat on the rupee is the biggest thing which is facing market participants. And unless we don't see the rupee stabilizing and there being general consensus that the worst is over, I wouldn't like to call for a bottom in the market until that point.
Dipan, hi, afternoon. There have been a lot of discussions in terms of the most prudent way to actually stem the rupee fall. What do you think would possibly be the most effective and prudent method that the government could adopt in order to do that?
See, I think it's a freely tradable instrument, and there's very little the government can actually do. I think they've done already quite a bit, and maybe some of it is actually having some kind of an impact as well. We had the gold import numbers come in earlier in the day, and those were quite heartening. And I think if gold imports get curtailed to around that 35 tons per month level, or we come off maybe 40-50% reduction from what we imported last year, then that in itself will remove a lot of pressure on the rupee. So it has to be these steps which the government has been taking, along with overall realization on the part of the average Indian that just by buying gold it's not going to benefit him, and as an investment kind of a product, it is completely makes absolutely no sense given the way gold is declining overseas. So unless that kind of a realization comes to the Indian households as well, and we see a sharp decline in gold imports, till that point of time I think the rupee will remain under pressure, and that's one kind of trend to look forward to. But apart from all these aspects, one needs to keep an eye on the crude oil, and until a few months ago I think we had almost no bulls in the crude oil market, and it was expected to start trading in double digit later this year or so. But instead of that, we have seen a strengthening of the crude oil prices, and that also is playing on the minds of investors over here, because maybe earlier in the year we just thought that maybe budget deficit would now come under control and the pressure from the government to borrow would be reduced, and that would be positive for interest rates. And as against that scenario, now we are again going to be grappling not only with current account deficit, but budget deficit also is going to be a bit of a challenge. So we are getting kind of boxed into both these deficits, and the macros, instead of improving, are actually kind of deteriorating. So it's a bit of a murky situation at this point of time, and all that we can do is just wait out of this time and hope for maybe some kind of divine intervention for a turnaround to take place, because we are getting into a vicious circle. And unless we see something dramatic take place, I think the markets and the rupee and the economy are going to remain under pressure.
Okay, just wanted your quick thoughts on Reliance Communications, what you made of that deal, and although there is something in it for the shareholders, do you feel that there will be any concrete debt reduction via what took place?
See, I think one positive aspect is that Reliance Communication now looking at reducing debt and getting more out of its assets, as against the earlier strategy of expanding domestically and globally and undertaking every single thing under the sun it could do so. So that particular focus of looking inward is far better from minority shareholder point of view than when the company was expanding at a hectic pace. So whatever steps they will take will be positive, and maybe 2-3 years down the line or earlier, they will be able to right size the balance sheet, and at that point of time you could see the stock come back on the buying list of a lot of fund managers. So all these steps which are being taken are positive, and many more such steps need to be taken with even larger numbers for the company, to go back onto its growth path and improve on its return ratios.
And do you expect it to come through, and do you think that this will be effective in terms of spurring growth or maybe credit growth at this point now?
No, I don't think so. And what we are seeing is just minor adjustments taking place in interest rates. At the same time, the sentiment is totally down as far as the industry is concerned, and the capex cycle is getting postponed. At the same time, I think growth is just not picking up, and a lot of management attention is now on the currency markets, given the way the rupee has been moving. And a lot of business models, strategies in terms of exports, imports are all being reworked at this point of time. So I would say that minor cut in interest rate, as what we have been seeing by the banking sector, will not have a material impact on growth rates. And unless we see RBI going back to cutting interest rates and signaling that it will maintain its easy money policy, I think at that point of time the markets remain under stress. I think historically, if you go back, the point of time when the G-Sec yield starts going below 7%, that's the time when we see improvement in growth rates and stock market rallying and GDP looking up, corporate profits also kind of inching up. So we are a bit far away from those levels, and I think that these minor adjustments are not going to make much of a difference.
Dipan, it's so disappointing to see the way ONGC has moved post what was deemed as the big trigger for the oil and gas space. I mean, last week ONGC was actually one of the biggest losers in trade, down about 4%, and this week again it started off on a weak footing. You think it's just the subsidy issues that continue to bog that stock, and how would you approach it now?
Yeah, I think it is a subsidy issue, and we are going back to huge under recoveries as far as diesel is concerned. And again, I think the share of upstream oil companies is going to go back to peak levels. So maybe a few weeks ago, few months ago, we were looking at lower and lower subsidy from point of view of government as well as upstream oil. And now the scenario has gone back and completely reversed. I think at some point of time, the under recovery for diesel had come to as low as 3 rupees, and now we are back at 8 rupees. And the government is nowhere going to be able to address that particular differential. I think the oil companies are asking for an increase from 50 paise monthly increase, what they have been granted, to at least a rupee or 2 rupees or so. But given the political compulsion, that looks extremely difficult. So I think unless we see a narrowing of the deficit as far as diesel prices are concerned, I think all oil marketing companies as well as upstream oil companies are going to remain under stress. So this is the kind of situation which arises when the rupee also goes for a toss, and we have crude oil prices also moving up. So in a way, it's a double whammy for the entire oil sector.